On the one hand, the financial media is telling us interest rates may rise, property values are going to slump, and we're going to have a difficult time in our property markets. On the other hand, we suddenly heard that there's going to be up to 200,000 new migrants in Australia next year. That's going to make a difference to our property markets, isn't it? So we're going to discuss what's happening to wages, to interest rates, migration, and our property markets in general in this week's Property Insider video. If you want to keep up to date with what's happening, please subscribe to our YouTube channel and click the little bell icon so we can let you know each time a new show comes out. If you're watching the news or reading the financial media online, it wouldn't surprise me if you believed higher inflation in Australia would lead to higher interest rates that could lead to mortgage stress and crash our property markets. Many are pointing to the United States, where inflation is at a 30-year high, wages rose 5.8%, and the Federal Reserve may begin hiking interest rates sooner than previously forecast. But currently the dynamics in Australia are very different, and while we have much smaller rise in inflation, before interest rates are going to rise, we're going to need to see a material pickup in wages. While the latest figures showed some good news and wages growth is back to pre-pandemic levels, the 2.2% growth is still a long way from the sustained 3 to 4% wages growth the Reserve Bank's looking for. Far from being a sign of coming wages boom, wages continue to struggle to keep up with inflation. In fact, if you take inflation into account, real wages have barely budged. So what are the implications of this for our inflation rates, for interest rates, and for our property markets? These are some of the questions I'm going to be asking Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market, in this week's Property Insider Chat for Yahoo Finance. And we're also going to talk about the suggestion that we're going to be bringing in 200,000 new immigrants into Australia next year. Hi, Andrew.
Hello, Michael. And it hasn't been a good news week for those that have been spruiking higher interest rates. And we've had that sort of higher interest rates are imminent storyline for months now. But the Reserve Bank certainly in its latest minutes from its latest meeting have certainly hit that one right solidly on the head, still reiterating its position that it doesn't believe official rates will rise until 2024. It believes that wages will not at least be sustainable within that 2 to 3% band by then. And of course, there's nothing in the latest wages data to really offset that opinion from the Reserve Bank. The expectation for higher rates really hasn't changed at all. And the numbers for the wage index from the ABS, Michael, were roughly as expected. Of course, there's a bounce back from the lows from lockdown last year, which pushed wages growth to record low levels. And there's nothing there to indicate that the Reserve Bank's concerns, and it does have concerns over wages growth, are likely to be offset in the shorter term. And we're still looking at 2024, Michael. So those that have locked in fixed term interest rates on the basis that they felt or believed I guess a lot of the media speculation of higher rates sooner rather than later will, I guess, be a little disappointed.
Now, also, the people who are predicting the property market's going to slow down or crash may get disappointed with the recent news that Australia is now opening its borders and looking at letting up to 200,000 visa holders into Australia over the next year.
Well, just as our markets are starting to run out of steam, they're still quite strong. Most capital city markets are still quite strong, Michael, but we're now seeing, I guess, a reinflation on the demand side with the news that 200,000 migrants will be moving back into Australia. And of course, they need somewhere to live, and that will add particularly pressure on our rental markets, which are very tight at the moment, generally, but also, of course, provide demand for our housing markets. Just when affordability was tapping out buyers, we've got a whole new boatload or a number of boatloads heading for Australia, looking for somewhere to live, Michael.
And it's not like there's that many vacant properties other than if you go to the CBD or around the university precincts. Now, recently the ANZ Bank brought out their latest forecast. Yet again, they've upgraded their forecasts and they've suggested we're going to have really strong capital growth in properties in 2021. Well, hey, that's not a difficult forecast to make considering there's only a month to go. And they've suggested there's going to be slower growth in 2022, and then property values are going to fall slightly in 2023. Not much, nothing like the big predictions they got so wrong a year or so ago. But I can't even see any reason why property values are likely to fall in 2023. It's a bit hard to make predictions so far out.
Well, it is always, Michael, and it's something we try to avoid. And the reason we try to avoid it is things change, as we can see, that have occurred over the last year, well, not the last year, really, the last how many years we've always seen something come out of left field. And what's the value of a forecast when you have to redo your forecast every 3 months? It makes for news headlines, but it's not that good if you're making investment decisions based on forecasts that keep being revised. But I broadly agree with what the ANZ is predicting for next year. Although I'm a bit more bullish on Canberra, I think Canberra will be one of the leading markets next year. But I don't agree with prices falling in 2023, although we are obviously a long way out from that. The only reason prices would fall is if we have a concerted period of higher interest rates. We saw back prior to the GFC, through the mining boom period of 2006 to 2007, that the Reserve Bank was increasing rates to slow down the economy, and it really didn't slow down the housing market until we did get to the GFC period. But so I don't think that we will have, obviously, that period of higher interest rates in 2023 that will push prices down. I think prices will continue to grow because we are still short of properties in this country. And of course, the other point is that we're going to have boatloads of new arrivals coming into Australia, which will increase demand. And I think that will keep our housing markets percolating. We're not going to go back to the boom times of 2021, but I think that we'll still see quite reasonable prices growth in 2023, reflecting an undersupply of property and also a significant increase in demand from migrants. An influx of 200,000 migrants into Australia will certainly add to the supply of labour going forward. And even though it does add to demand in the economy, there is a question of whether that demand comes sooner or whether the supply of for labour pushing wages down potentially comes sooner, which one. But it will be an interesting outcome. But at the end of the day, certainly it will not put upward pressure on wages in the short term. There's no doubt about that.
It will put upward pressure, though, on initially rental accommodation and then eventually house prices as well, won't it?
Absolutely. And that's the point. We'll then see the demand side of the equation starting to reinvigorate our housing market, which are starting to show signs of, as we've predicted for quite some time, the logical finale to the boom, which is affordability starting to sideline buyers, and many buyers have satisfied their demand now once the lockdown restrictions have eased. With 200,000 extra coming into the country, that's certainly going to put a lot of pressure on what is fundamentally an undersupplied housing market.
If we have a look at the auction results over the weekend, it seems like the surge of late spring listings for properties for auction caused the Melbourne and Sydney clearance rates to ease, but boy, were they still exceptionally strong, really at boom time levels in the other capital cities, Andrew.
Well, we've been obviously tracking this, Michael. We've seen that auction clearance rates have started to ease, particularly in Sydney. But Sydney's the market that's been the most advanced in terms of the cycle and the boom. Affordability issues are now starting to impact buyer activity in Sydney. And of course, many buyers have satisfied those pent-up demands. But the market's still tracking well and truly in favour of sellers in Sydney. But the buyers have now got a little bit more say in the equation. But high listing numbers are also a factor, Michael. We're seeing very high listing numbers in Sydney, a combination of what we always see at the end of the spring selling season with high volumes of properties coming into the market. But it's being exacerbated, of course, by the end of the lockdown, those sellers that had their decisions on hold are now back in the market. So that's acting to increase supply, providing buyers with more choice and sellers with more competition. And that's another factor that is pushing clearance rates down. But the market still is in favour of sellers in Sydney. Melbourne, likewise, big auction numbers in Melbourne for the same reasons. The Melbourne market is still tracking certainly in favour of sellers in the mid-70s, but we should likely see those numbers continuing to ease slightly over the remaining 4 weeks of the spring selling season, Michael. But the big story, of course, is the smaller markets are well and truly punching above their weight. Could we say that? Particularly the Brisbane market, which is recording auction clearance rates that we haven't seen really before in the Brisbane market, which hasn't been a strong auction market in terms of its selling culture, but it's certainly embracing auction activity now. High clearance rates amongst the highest of all the capital cities, and no surprise given the strong competition for property in Brisbane at the moment. But Canberra and Adelaide are well and truly still in boom time mode. despite high listing numbers coming in, there's plenty of buyer activity, and clearance rates are super high in those markets and are likely to continue, certainly well in favour of sellers with higher prices over the remainder of the year.
There's only 4 weeks left for the remainder of the year, Andrew, so I can see quite a lot of activity as buyers and sellers are going to want to complete their transactions so they can move into a new year in their new homes.
Yes, it's always a good feeling, and to be able to move into the holiday break with the glow of new home ownership impacting your seasonal celebrations.
Well, we're looking forward to another great year in 2022. Won't be as good this year. One of the things that won't change, though, is we'll be back each week providing these weekly property insider chats. Look forward to catching up with you next week.
Yes, thank you, Michael.